Today we are going to be talking about some mortgage myths that I come across as a mortgage broker in Scotland, and I'm going to talk you through the top 5 myths that I hear when talking to clients. The very first one that will draw your attention to is that I hear is mortgages are only for people who are wealthy. This isn't the case. There are lots of mortgage options out there, lots of lenders out there who offer mortgages with no minimum loan amounts, with no minimum income criteria, and they'd be able to assess your personal circumstances and try and get you a mortgage for your home. There's lenders out there in the market, depending on your circumstances, that would also allow you to buy with 100% deposits. So, for example, if you're currently renting and you're trying to buy from your landlord, if you are renting, you can take part in the track record mortgage scheme that's available. So there's plenty of options out there. And let's not forget about the lift scheme. The lift scheme is designed to help people on low income buy houses that was maybe out of their reach. The government steps in and gives you up to 40% of the property value towards the deposit. And you can even use this scheme to buy without any deposit. So there's plenty of schemes and options out there for mortgages for people who aren't traditionally what you would class as wealthy. Next one I hear is that you need a perfect credit score to get a mortgage. This is also a myth. Some lenders don't even care about credit score. Some lenders are more interested in credit activity, which is really important, especially if you're buying your first home and you don't really have any credit. You haven't taken out cars on finance. You don't have credit cards. The only thing that you've maybe got is a mobile phone. So when you're looking at your score might look low, but in actual fact, you've made all your payments on time, and that will be enough to get you a mortgage, because your credit activity is ultimately more important. But even if there is low credit and poor credit and a history of late payments and missed payments, defaults, CCJs, even bankruptcy, mortgages could be an option for you. So you don't need to have a perfect credit score to get a mortgage. Next is that I hear fixed rates are always the best option. They're not. The best rate is individual to everyone. The best deal type is individual to everyone, and it's all about what's right for your circumstances. Recently, I was working with a client who was coming up towards the end of their fixed rate period, and they were planning to move house. So what we did was we decided that the right course of action for them was to go into a more flexible deal, something that wasn't going to have any early repayment charges for a period of 3 to 6 months, that then allowed them to move without any restrictions on it. Because the current lender that they were with was restricting the amount that they could borrow. So what that did was that allowed them to move on to a different type of rate, not be tied into any particular lender. So there's lots of different options out there, and it's all about what's the right one for your personal circumstances. Something that I hear as well is that people that are self-employed can't get a mortgage. This isn't true either. Typically, you can get a mortgage from someone from day one of being self-employed, depending on the industry you're in. So, for example, some solicitors, doctors, you can get a mortgage as soon as you go self-employed. It depends on the kind of work it is that you do, but that's certainly an option. Depending on the structure of how you're paid as well. So if you're a CIS contractor, for example, you don't need to wait until you've got 3 years worth of accounts or 2 years worth of accounts. So you can look at all of these kind of things as well. And typically speaking, if you are self-employed, you can actually borrow the same amount of money as somebody who is employed, provided that you've got a track record of earnings in the industry. So it is certainly possible. And the fifth one, the final one that I'll talk to you about today, is when you're declined by your bank, the bank tells you that you need to wait. It's usually 3 months, but up to 6 months. That's not true. What you need to do is explore the reason why that you've been declined, understand it, see if it's anything that's been your problem or if it's something at the bank's end, because sometimes the bank will decline you for their internal criteria, but they won't tell you that. They'll tell you to go and wait and come back and try again in a few months, when they know their internal scorecard might be different. So if a bank has declined you, my recommendation would be to explore alternative options to find out why that's happened. But I do hope you found this useful. As always, if you did, please, if you could, give it a like and subscribe. Cheers.